No audio, Mike. Sorry, I had my microphone off. My apologies. Thank you for letting me know. My name is Levi Woods. This is Drawbridge Finance. It is February 25th. Markets are down slightly today. This is my Tuesday live stream, completely free for everybody. And as always, everything we talk about here is not financial advice in any way, shape, or form. It's just what I'm doing, what I'm looking at. And we're going to get right into it right now. If you have questions about any tickers, let me know in the chat window on YouTube. I'm totally able to talk about anything. We'll pull up some live charts. I've got IBKR loaded up. I've got investing.com loaded up, and we'll take a look at some different things. Thanks, Mike, for letting me know that the audio wasn't working. You know, that's always one of the woes of being a streamer, is that I have to deal with these technical things. Let's get into what's going on in the market. We are going to look at S&P 500. On the right-hand side, we've got the 1-minute chart. You can see this morning we had a little bit of a sell-off. We have this large point of control, lots and lots of volume right at this 59.82 level. So there's something to note there. Quite a large amount of selling that was happening at the open this morning. So we saw this drawdown, and now kind of recovering a little bit. We're up above VWAP on the S&P 500, and you know, there's a little bit of tariff concerns, obviously, in the market in general. So S&P 500 down 0.4% right now. If we look at NQ, which is the NASDAQ futures, we had a really strong bounce right off that 21,000 level this morning. So we came down here, we touched just a couple dollars below that 21,000 level, and functioning very well as support, which is nice. Much more volume showing on NQ, and we're seeing that up, trading near VWAP right now. Again, we're looking at, you know, potential tariff woes and just the economy not being super strong. Are we looking for a potential breakdown? We've had a couple of days legging down here, so we are definitely in the running for a bounce and a strong recovery, or we could see a continued downside move. VIX this morning was up above 20. And if we look right here on the screen, we've got VIX marking right now at 19.1. So it's actually come down a little bit from where it was. We reached up to 2150 this morning. So a nice little move. Great time to enter some short premium for those premium sellers. I actually put on a naked trade, naked downside risk, which is something I haven't done in quite a while. I'm doing it still with traps to the downside, so I'm doing it as a put ratio spread, but that is something that I'm looking at when the VIX goes above this 20 level, because I know that's the best time to sell premium. VIX is one of the few things that mean it reverts, so we have to take a look at that. What else do we have? IWM marking at 215.36, definitely the least the worst performer right now, and we're seeing it at this level that we saw back in mid-January. So we're testing those same support levels. We'll see if it breaks down or rises back up. Really tough to say at this point in time. Thank you guys for the likes. I appreciate it. That does help the channel a ton. And just let me know if you've got any tickers you want me to look at. We'll pull them up and take a look. SPY. We obviously talked about Apple trading at 247, actually pretty strong. Lots of stocks coming down though. Tesla down 9% today, right at this 300 level. Let's take a look at the chart and see what it's doing. Let's pull up a slightly bigger chart here. We'll look at, I don't know what that's doing. Why is it giving me that warning? I always hate when it does that, because then it pops up weird things. Just give me 1 second. Okay. TNA, back to that. Okay, so looking, I've got some strategy stuff on here we should not be looking at, but Tesla coming down at that 300 level. This is the 1-minute chart. Let's go out to the daily and just take a look at what has been happening. Because we're coming right down to whatever this line is right now. What is this? This is the improved VWAP crossover. Is that what that one is? the VWAP crossover. We'll see what happens at this level. Obviously, 300 level is a pretty big number for Tesla in general. The one I wanted to look at today, let's take a look over at Interactive Brokers, because this is Palantir. Now, this stock came up massively overvalued, in my opinion. This came up in my local meetup last week. So I have a local trading group. You guys should all have a local trading group. Get together with people, have some beer, and talk about some stocks. One of the things that came up about Palantir was whether or not it was going to continue to go up or if it was going to go down. Now, our meeting was a week ago on February 18th, where it was really, really strong. There was quite a bit of discussion about how low the stock could go, targeting as low as down to this $40 range. And we definitely talked about how this gap would likely fill. And as of today, it has filled. So bouncing off of this 50-day moving average, and we'll see what happens with Palantir. But now that this gap is filled, we could easily see this rise again for those market, participants that are playing both up and down on these stocks. So a nice potential opportunity to either see Palantir break down or break up, but unlikely to hang out in this range, in my opinion. You guys haven't let me know any tickers, so if you could just type in the chat, and why don't you put in a number? Just type in 1 in the chat if you think Palantir is going to go up, and type in 2 if you think it's going to go down. And it's a really easy way for us to kind of vote and collectively have an opinion together, which I think that when we trade with people and we talk about strategies and bullishness or bearishness, we have a tendency to make better decisions overall. So I think that that's important to have that dialogue. Let's, Mike Mueller, I've started experimenting with buying butterflies with centers around where I expect the price to go. I believe you're a big fan of them. I definitely am. I think that when we see opportunities, let's just take a look at AMD. Not necessarily butterflies per se. Butterflies are a bit hard to get like a decent credit for. But there's one trade that I like called a honey trap that I like to set up. And typically, like with AMD, I've got a target on right now, targeting the 100, 105 range. This is kind of where I think that the stock might go. And we can do this on a pretty short time frame. If we look, it's already moved into my tent, but if we were to, let's close that off. Let's close that. If we say we wanted to do something $5 wide on AMD, just building a condor. So really simple, just to put condor, I'm going to show you all the strikes there. So we've got a $5 wide bullish spread, and then we've got a $5 wide bearish spread on this. If we look at this profit profile, it's going to show off. It's going to be off the screen. Let's get that back down here. There we go. I'll get myself off there so you guys can see. So that is what the trade looks like. So this is like a pretty typical kind of iron condor setup with the peak between 100 and 105. Now, the nice thing about this is the returns are often quite good comparatively to the risk reward when you play them very tightly like this. We've got a potential of making $277, and we have a max loss of 223. So we're making a 100% return if it falls in this range relative to how much we're risking. Now, of course, we can't bank on that. It actually has a fairly low probability of profit. It's only got a 46% probability of profit. And we do have to pay attention to earnings as well on these. AMD's earnings are not till May, so we're okay with that. This is a March 6th trade. With this type of trade, what I will often do is I will change the ratio. So I will go down to the lower side, the bullish portion of it, the 95-100 spread, and I will sell a ratioed version. So I might sell 3 bull put spreads for 1 bear put spread. And what that will do is it will, let me load up that profit profile again and see where it's going to show up. Come on. what that does is it gives me a profit profile where I have the chance of making $400, which is a 40% return on risk capital. The total max loss is 1,068, and the either credit to open or a small debit if the market goes up. So it creates a much wider range. Probability of profit on this is still marking at 48%, and that's because we've got this small window here. What I typically do is I want to open these for a credit. So, however, I have to adjust that to make it work. Maybe what I'll do is I'll go a little bit wider on the bear portion and collect a small credit. In this case, I can get into this for about 15 cents. It means that I have a single break even down at this level, 98.68. So as long as the stock stays above 98.68, I make some money. I have the chance of making $400 and I have the chance of losing 1,100. This is the type of setup I like. These work especially well if we're entering them on up days. So not a fantastic time right now, but if we were to look at the chart on AMD, if I was to pull this up and I placed my trend line or my horizontal line in here, I would be profitable above this line. So it's very similar to trading the way that we would trade with a short put. It's just a defined risk strategy, and it's something that I like to do. So that's the type of setup. Now this can be adjusted in so many different ways, but that is kind of the primary where we've got. Let's do another one. Let's look at Palantir, for example, and see what where we might want to put a trade. The stock's trading at $88. I actually think we're going to see a bit of recovery from this level, so I might want to go above, and we can do that with calls on this type of thing. So I might go out to next week, play a relatively small trade, and say, what happens if we were to build a trade where Palantir was staying, in the low 90s or recovering back to the 190s. This costs 25 cents to get into it. It's really low risk relative to the amount of reward that you can get. So in this case, with the profit profile, we've got $25 of risk and the potential of making $175. So really inexpensive, like lotto ticket type plays, and a fairly wide range actually from 92 to 95. So we can, when they're not inside the tent, it's actually a really good time to potentially put these on. Now let's just see where that 92.95 is, and then let me just see here. I've got the 92.95. So that would give, there's 92 is on the downside, and then a 95 on the upside. And of course, I can do all sorts of things with this. I could limit the amount of spread risk on the top side. So I could say, well, I only want $1. Now this is going to cost me 75 cents. It's going to give me a profit profile that gives me that spike, and I have basically no risk to the upside. All my risk is to the downside. So this gives me a bullish trade overall. Max loss 95, max return is 100. And if it was to rally up, I wouldn't make very much at all. It really depends on how much you get into this for. So $60, if we could fill for $60, these can be quite nice little trades and have a high probability of making money. And then there's only one break even. Like on this one, it's 90.95. So that trade, with $60 trade, makes some money as long as it stays above 90 or goes above 90.95. And then this line would not be here at all. And this whole area becomes the profitable area on that trade. So $60 in risk with the potential of making $100 if it comes up into this level, and making like $20 or so, which is still a 30% return on capital if it's in this upper range. Something to consider for sure. So Brian, if you want to take a look, we'll take a look at AMD. We'll look at the fair market value over Investing Pro. I have, the chart, we're trading below the moving averages. We've been kind of bouncing off of them and going down. One of the guys in my local trading group joked the other day that AMD stands for always moving down. I disagree. I think we're going to see a move up in AMD at some point in time. We don't know when that's going to be. Fair market value right now, $121, 15% upside. So I'm leaning slightly long delta. Overall, the performance has only been fair. We've been obviously for 3 months down 25%. So I'm looking at this as a long buying opportunity. I have long deltas in AMD overall, and I am playing short duration traps with that value between 100 and 105 being my max profit range. So I'm doing a combination of things. If AMD went up, I would probably lose a little bit of money on my trap, which what I was showing you guys how to set up, and or make very little on it, and then I would be making money from the long deltas that I'm holding in my account. Well, let's take a look at Seeking Alpha. It's a really good idea to have multiple services where we can kind of compare as to what is going on. Quant rating is a hold on this, with valuation as a C. It is a profitable company, but the momentum is poor. You can see some analysts on here saying that they're buying the dip. Now, these analysts are just authors for Seeking Alpha, so they get paid to write these, and they often have an opinion. But on the 1 year, we're down 40%. I'm looking at this as a buying opportunity, and I am currently long quant rating as a hold. If you guys are interested, I do have discount codes for these services that I show off. I'm affiliates for each of them, so if you're interested in signing up, it helps me a little bit. I get a little kickback if you use my links. You get a discount, so it helps everybody. And I do use them. I think they're good services, both Seeking Alpha and investingpro.com. Big Kartoffel says, I'm going to go up or down depending on Nvidia earnings, probably. Yeah, let's take a look at the Nvidia expected move and see what is happening. Somebody asked me the other day about one of my videos that I shared about how to back of the envelope calculate the earnings move. And the video is 4 years old, but it totally works. It's a great video. And I think it's important to understand how a potential earnings move could happen. So we've got Nvidia sitting at 127. We've got earnings coming up. We've got earnings coming up 226, which is tomorrow post market, and we don't know what's going to happen. We've got the surprise. They've beat quarterly estimates the last couple of times. So we can see that has happened. Let's look at the expected move on Nvidia, and I'll show you just quickly how I would calculate it with a calculator. So you don't need anything fancy for this. We're going to click on Nvidia, and I'm going to go to the options chain, and I'm just going to look at the weekly chain. So this is the expiration that happens this Friday, just three days from now. Now I'm going to look at the values of the at the money. Now at the money is 127.49, or sorry, the current value is 127.49. So we're at the money is right here in the middle, and we're just adding these two values together. So $7.0650 adds to $13.50, and then we take our calculator and we divide that or multiply it by 0.8. So we're getting 80% of the expected move. So in this case, 1350 times 0.8, and that should give us $10.80. So that's the expected move from the current valuation of 127.56. Let's take a look at the chart and then just put that on there. So we're at 127.60, and so 1080 above that would be, help me out with that math, it would be 137, 139.50, right? So that's the high side, and on the downside from here we would be to 116.50, and then plus another, so 115.70, something like that. So that's the expected move. Now that's actually right in line with where it's been trading. We're seeing a little bit of support here right at this 200-day moving average. Obviously the stock has been trending up. How can we play this? How do we move out, put on a trade that is outside of these parameters? Below the 114, we don't expect it to move, and above the 140. We can play that with a condor quite easily. So we go out here, we go to, I like to play relatively safe with these if I can. You know, this is a fairly big product, so this would be maybe $700 wide. So that's about $700 of cost to buy out. I'm gonna kill this straddle that I had on here. That's not part of the trade. We're gonna go to that 140, which is the expected move. We're gonna go a little bit further than that and see if there's a $7 wide on this. I can go 750 wide if I do the 145, 152. And that is going to give me a credit. So both of these are credits, and let's load up the profit profile here. Saying it's a bull put, which it's not. This is an iron condor that I'm building. Just being a little bit slow here. There we go, $1.65. So when we're looking at this type of thing, you know, what is the potential reward relative to the amount of risk that we're taking? Now, this could easily go outside of this range. So this is the way to play it if you thought that it wasn't going to stay, or if it was going to stay inside of the range. There's $160. Max loss is 5 to 90. So from a return on capital standpoint, if it stays in that range, we've got 160 divided by 590. And these are relatively binary events. So this is a 30% return on capital relative to the risk amount. And the break evens are 110 and 146.59. So if we were go back to this chart, we have those lines, which are the expected move, and then 110 down here, and then 146 on the upside. So that is the break even range for that trade. And pretty wide. It's outside of the expected move here. So you guys can see that the expected move is these inside lines, and then that iron condor trade is the outside lines. Collects a 30% return on capital, which is very reasonable. Now, you know, earnings trades can be very binary events. Sometimes it's better to play them directionally. If we wanted a directional trade on Nvidia, it's very simple. I would typically just trade this with some sort of put spread. So I would go out and say, you know, I am buying or selling the 135, and then, you know, buying the 120, and there's a debit to do this trade. Sorry, this is a credit to open. And the idea would be that the stock would hopefully go up above the 135 level. Let's get this profit profile, and then we would have a win. We would get to keep all of the credit if we, that wasn't what I was trying to do. I was just trying to move this around on the screen so you guys could see this spread. So in this case, we've got it's similar to owning stock. If it goes up, then we make some money, and if it goes down, we lose some money. Again, binary, $750 in risk to make 750, 49% probability of profit. Pretty easy to turn these into little butterflies to increase that probability of profit if we add some upside risk. Say I thought it was going to go up, but I didn't think it was going to go up above, you know, 145. Maybe I just thought it would go between 135 and 145. That's where I would start to add in a bit of risk on the top side, and I can increase the amount of premium that I collect by selling a spread above. Now in this case, it still makes money if the stock goes up, but you'll see the probability of profit is now 51% rather than 49%. My max return is 797. I can actually make more money, and I'm taking less risk. So I've actually decreased my risk, increased my potential, but I've increased that potential only in a range. And of course, I can go wider if I want. The wider I get, the more upside risk I add. Flattens this top, but increases my initial credit to open. So I think it's a good idea. For me personally, I like to trade in this style where I'm getting a bigger credit. This would be $800. Let me just reload this, and we'll take a look at that profit profile when it loads up here. And I will take a look at, we're just going to wait for that to load. And Mike says, I've been doing the butterflies on 0 DTE SPX, 50% yesterday, 100% today, low risk, high reward. That is fantastic, Mike. What is the setup you've been using? So you're getting 100% return on capital, which is amazing. And are you setting up on either side? Is that what you're doing? You're like looking for a butterfly, and are you doing broken wings? And are you playing both sides, like a call side and a put side? Like yesterday, we didn't know where the market was going to go. Obviously, it moved down quite a bit. So if you made 100% return on risk, I'm assuming your butterfly was actually much bigger than the amount of risk you were taking, which is a cool way to set it up. Let's take a look at SPX and just see how easy it can be to set up something like that. So happy Tuesday. Good to see you, John. Thanks for joining. William says advanced money destroyer. Yeah, it could be. Mike Mueller says Levi's videos need to have more swords. I've got a couple. You can see my swords. There's two. I've got 2 swords in the back. Look at how many helmets I have, though. There's helmets everywhere. I should show you guys. I have this little. We were talking about this the other day. This is one of the helmets. You see, you get me off on a tangent. This is one of the helmets from Dirk Gently Season 2. I built these. This one's aluminum. I built these for that show. Fun little toys. Surprisingly good visibility, actually. And of course, I got just stuff laying around everywhere. This is my Lannister helmet from Game of Thrones. I'm close personal friends with the armor mistress on Game of Thrones, and she always gives me a hard time because she's like, these are better than the ones that we had on the show. So mine are full steel. They're still costume grade. They're pretty lightweight. Are you thinking that I should do these streams in helmets? Like, should I just do the stream like that? Would that make this better? I don't know. We'll see. Maybe one day we'll see me in my full kit. Okay, let's get back to, let me get back to trading. That's a different type of thing. John Blake says, that's so fun. Yeah, it is pretty fun. Different world. I'm getting my shop set up right now, so I'm actually getting back into building some armor. I should share with you guys, there's this awesome interview of a friend of mine, Douglas Pryor, who just did an interview with Atem Savage, which is pretty cool. So he was like in Atem Savage's workshop, and they had a pretty good time, like just going over some of the stuff that Doug does, because he is a fantastic metal artist. I should post it for you guys and let you know, share the love, because we talk about options all the time, but we also have pastimes outside of the realm of trying to make money out of the computer screen. So it's good to talk about that. Mike Mueller says, regarding butterflies, I've been studying GEX to look at where I think prices may go. I buy a 10 wide butterfly when out of the money with the premise it will approach the fly, only to the downside lately. Interesting. Where you're getting your GEX data. I would love to talk to you more about this, Mike. I would love to know. I know that Bill Baumeister does a lot of like GEX pre-market trading. And so I follow his stuff in the Tasty Options group on Facebook. Some interesting stuff. I actually have never looked into like actually GEX data, but I think I understand. So I would love to chat more with you. Let's set it up and have a chat about that kind of stuff. But for now, let's look at Nvidia. This loaded. So here's this trade where we've got $685 in risk, and if it was to go up, this little condor, we've got a max profit between the upper strikes. So in this case, between the 135, 145 range, and there's no risk to the upside. If it was to blow through, it'd be a very, very small win, but it would be a win nonetheless, and has a chance of making credit collected, which is $835. So that's kind of one of the ways that I like to set up these trades. You can do this with all calls or puts, or in this case, this is a call spread and a put spread together. Let's look at SPX. So you're looking at $10 wide spreads. I feel like on SPX, why do we not have, why is SPX not here? Where's my other, I'm missing one of my little windows here. Somewhere, there it is. It's jumping all over the place. So SPX. If we were to take a look at SPX, let's look at today. I mean, we might as well. There's still an hour and a half left, and you can totally trade. Like, you can trade butterflies with 0 DTE with an hour and a half left if you wanted. How much would it cost to get into a $10 spread at this point? Say we thought that the market was going to continue to go down. We can just buy a little butterfly here, the 1920, and selling 2 of the 530s. And again, we can do this with puts or calls. This is going to be very, very low cost trade to do, especially late in the game. And what that would do is it would give us, what's going on here? I didn't mean to punch that in. We've got what we're doing is we're buying and selling some spread. So we're paying $1.60, we're paying $5, and then we're collecting $5.50 for selling 2 of these centered. So what this does is it gives me a $10 butterfly, and it's going to be a cost of around $160. And if we were to look at the profit profile on this, it's not even coming up, but if we were to look at the profit profile, we would see that we could make up to about $800 or $900 on this trade. And there we go. So $100 in risk, and we have the potential of making, this isn't going to pull up, fighting the brokerage all the time here on this. What we want to do is get really good pricing on this. And this is an excellent way to do it. It is a little bit late in the day, so maybe what we should look at is tomorrow and say, well, what happens if we want to take a bullish position on tomorrow's strikes? What does that look like? And we can, or bullish or bearish rather, we can build a profit tent to the downside. This isn't loading at all. I prefer, if you can afford it, to build these like really, really big, as big as you can. So with this type of thing, you know, if you can afford to do a 25 wide, now we have the potential of making up to $2,500 credit to close, and it's really just the cost of what it costs to get into a trade like this. So again, we're collecting 780 times 2, which is about $1,550, and then we're paying back $14 and then paying back $4. So $1,550 minus 18, so we're about $300 in total risk, and we have the chance of making about $2,500. These are huge potential wins, and we can target these levels where we can say, well, there's the 5,900 level. The other way to do this is with calendars. So here, it's only $250, so you can make up to 1,000% return. And we don't expect to make 1,000% return, but you can. These are the relatively low risk trades for what they are. Making a 50% return in a day is a fantastic way to trade. There's other ways to do this as well. This type of trade, the profit profile, when you look at how this functions, the window of opportunity or the profit range is actually relatively small. We have a profit range $23 away from the 5,900. So if it was trading as low as 58, basically below these wings, effectively. If it's above this wing, it's a loss, and below this wing, it's a loss. So when you look at from a profit perspective or profit probability of profit, there's actually a relatively low probability of profit on these trades, but the return is huge. Of course, this chart isn't loading. Trade that I like to do if VIX is down, if we're talking about day trades and flies, one of the trades that I like to do is actually a long butterfly. And basically I buy at the money and I sell $30 away. And I only do this on days where I think that I only do this on days where the market the VIX is low, when the VIX drops. So tomorrow might be a day where I would put on a trade like this. Today I didn't put one on, but this trade would have been a winner today. What happens, what I'm looking for, so these go on right at the outset of the day, and there's a debit paid or a credit collected depending. And if we are looking at the profit profile on these, really need to figure out a better system than IBKR. What are you guys using for brokerages? Like, what do you use for this? Are you using like option strat, something like that? $6.20 is what we're showing here, but I've got no profit profile. But if you can imagine, this one actually has a really, really wide range of potential because it has a loss in the middle. And oftentimes the market moves. Like today, the market moved 37 points. So, or 33 points. So this trade, if I had opened this at the outset, I'm 30 point wide, it would actually be in my max profit zone because it's moved more than 30 points from where the market opened. And I do these like right at the beginning of the day. This profit chart isn't loading, but take a look here. Okay, got some people online. We got 6 likes. It's fantastic. Let me know some other tickers. We'll take a look. And yeah, Mike, I like 10. If I'm doing credit butterflies on SPX, I feel like 10 isn't wide enough. I would rather go bigger, spend a little bit of money and get even bigger hits. The only issue with that is when they go in early. That I find is the hardest thing. It's like if we get into the if we have a butterfly placed and then the market moves into the fly, but it's really early in the day, I find them a little bit difficult to manage. So sometimes what I do when it moves in is then I buy butterflies on the outside, and then it kind of creates like a triple peak. And then that can be a good way to manage it if we're using those smaller trades. But on a $10 wide, the price holds almost to the end of the day. So even if you were to get into those at the very, very close to the end of the day, they're nearly the same price when we're only $10 wide. It's the bigger butterflies have a tendency to make more money a little bit faster if it does drift into that zone. They still can be played later in the day. It really becomes to about where the market's going to close on 0 DTE. So that's what we need to pin, is where is the market going to close? And I mean, we could easily do that with 10 minutes left. It's crazy. You can sometimes buy like a $10 wide butterfly that is out of the money for like 50 cents. And that's a trade that could make $1,000. So you've got a huge amount of potential if it slides right in and pins it or gets close to it. But I like those trades in general. I like butterflies on SPX. I just prefer them a little bit wider. Mike Mueller says, Bill is who piqued my interest in GEX. I built a spreadsheet to charge GEX levels. I'm just learning. Cool. Where are you getting your data feed from? Where is that coming from? Do you have to pay for that? Jackson Tate says, every time I join your stream late, I always find you fighting with IBKR. Maybe it's you, Jackson. I'm not blaming you in any way, shape, or form. Oh, look at this. It's I have been fighting with IBKR, but here's this trade. So if we were to put this on right now, we would get a credit of $540, probably a little bit more than that. And you can see how wide the profit range is. It's massive. Now, I don't expect a 30% move in SPX, but so let's zoom in and look at a 5% move and see if that'll show us what that looks like. And because that's a lot more realistic. Today, the market only moved 0.35%. And if we were to look at today's, we'll go take a look at the opening value. Actually, we'll just look at it right now. Let's just zip over here and take a look at the SPX. So today at market open, we were at 59.86, and we're currently trading at 59.63. So with those trades, typically for a 30 wide, it's costing about $20. So actually, to be profitable, it only has to move 20 points either way. So and today, if that was to open at 59.85, we would need max profit would be anywhere below 59.63. Sorry, max profit would be 30 points below if we did a 30-point long butterfly. So that would be 59.55. But profit zone is below 59.64 and above 56.04. So it actually is like a really small range. It's like 40 point range is the losing zone, and everywhere else is a winner. And that trade can make a 33% return easily. So for $2,000 worth of risk, if it drops at least 30 points or goes up 30 points, it's $1,000 trade, $1,000 on a $2,000 risk. Now, of course, there's losses as well, but it's very rare to lose the whole 2,000 because it would actually have to pin right at it. Now, in this case today, with this crazy amount of selling volume, with this large point of control that we're looking at here, that would kind of scare me, just seeing how much volume there was. Now, that was mostly yesterday, I'm assuming. If I zoom into just today's price action, this is a visible range volume profile, you'll actually see that most of the volume buying was down here at the 59.30 level. So we're currently outside of the typical range here, and I could see us moving either direction, either up or down. And it's interesting to play those butterflies. I mean, they're relatively cheap, even when you buy them at noon, or sorry, noon my time, 1 hour before the market closes. Shamal says, have you hedged your portfolio? If yes, where are you hedging, gold or puts? I always have been playing puts on my portfolio. So I play limited loss trades on everything. I don't have any naked positions, except for I did open a naked Qs position today. Sorry about the beeping. Somebody's pulling up here with a dump truck or something from the city. Don't know what they're doing. Gold, definitely bullish on gold. Let's take a look at the gold levels. And where's gold here? We'll just pull up the gold chart and take a look at, sure, why not? Let's just look at gold, continuing to move up. This is the daily, we're at 29.23. I would be watching this. This is an improved VWAP crossover. Maybe that's not the one to look at. There's no session on here on the VWAP, but yeah, I'm playing rather tentatively at these levels, but I do expect gold to continue to push, just because of the cyclical nature of the business cycle of how money moves around. We're just into a commodities rich time. If the market sells off, obviously gold is going to pop up. You know, it's going to pop up. So I'm tentative about how I put in my positions, but I am not holding long deltas currently. But if we do get a little bit of a pullback, I will put in some long deltas, and a bit of a pullback has to be just because like where it is, you know, I would love it to be more in line here with this like 2,700 level. But even if we drop down to like the 28 level, I would start to lean long deltas. But there's a lot of risk right now with the way that these candles have been forming, just from a relative strength perspective. You can see this point of control is down here at that 26.45. That's a long ways. And with gold, if I am playing strategies, I definitely am playing limited loss, where I target a profit and then I target a loss zone. And I wouldn't take unlimited risk on gold positions, because it could just turn and move down considerably on us. We don't know. But overall, the outlook is still positive for me. Mike says he'll shoot me an email. Appreciate that. That would be awesome. That would be awesome, Mike. I appreciate it. If you guys ever want to send me an email, please do. I'm always responsive. I try to be as responsive as quick as I can. I do get a lot of emails from people. You can head over to my website. You can send me a message there. You can sign up for my newsletter, do things like that. I do have a bit of time here, so let's get a couple of more questions about anything. Do you have a question about a particular strategy? Do you have a question about a stock? We can pull it up and take a look. If you type it in the YouTube chat, I will take a look. This is a stream where I don't have anything scripted. I'm not showing off anything. So when you guys join my members only streams, which happen on Thursdays, there's a little bit of a different format that I run, where I actually go through my individual positions and I look at what's expiring, and I talk about the individual positions in my portfolio. But in this Tuesday stream, it's just a free-for-all. We get to talk about whatever we want. Mike says, regarding the inverse long fly you were talking about, I nearly pinned one last week for a near full loss. That was tough. I did as well, but that's pretty rare. So I find that, when I was playing short flies, I would very occasionally pin a win. And so oftentimes I'm not getting a very big win relative to what I'm risking. And with the long butterfly, it's like super rare that you're getting close to that full loss. So if you take into consideration, let's say that the minimum on an SPX 30 wide long butterfly is $2,000 investment over the course of each day, right? So if someone was to risk $2,000 every single day, how many times does it lose the full 2,000? Well, not very many. And especially not very many relative to the wins, which are typically a $1,000 win if that move happens to the outside. Now, the crazy thing about anything like that, with the SPX especially, is that if we play enough iterations of the same strategy, say we just traded the same strategy every single day, a long butterfly or a short butterfly, they would effectively be net zero over the long term. And the reason for this is because the market makers have got extremely savvy about how to price these markets. There's not as much edge as there used to be. When I started trading options, and especially like condors, there was much more edge than there is now. So as that edge disappears, and when we have times of low volatility, we end up with a net zero trade, which is what they are. Unfortunately, with our fees, they actually become a net loser. So it's something you have to find the edge again. One of the things that I've been doing is only playing long butterflies on days where the volatility or the VIX level is low. GEX may be another way where we can sort of take a look. The other thing we can do is build butterflies that aren't even. Uneven butterflies don't have that same ratio. So if there is going to be long momentum and we can build a big butterfly where we're getting like a way bigger return, 700 or 800% of our risk capital, well, now it can be easier to build capital over time. That's why, building bigger butterflies, I think is kind of the better strategy in the long term, rather than trying to find these like small little wins and keeping the losses really small. Betting a little bit bigger and winning bigger generally works. If we look at it from a swing trading perspective, lots of swing traders do like a 3-to-1 ratio. So if they're risking $1,000, they've got a profit taking of $3,000. And what that does is it means they don't need as high a win rate, because if you win 50% of the time, but every win or most of the wins are getting $3,000 compared to a $1,000 drawdown for 50% of the wins, you end up being net positive on those trades because the wins are bigger than the losses. I would apply that same strategy to butterflies, where making 100% is okay, but making 300 or 400% on risk capital is really what we want to do. And then we only have to win, a small percentage of the time. Setting those up as broken wings can do that. We can actually do that with long butterflies as well. We could build a tent that has dips to either side. So buying 2 troughs, you could almost never take the full loss on. Well, you can't take it on both if there's 2 troughs, and then you have quite a wide range. Haven't really done a lot of that, but that is one thing to consider as well if we're doing narrow butterflies. So long, narrow, short butterflies, wider, if that makes sense. John Lindsay said, did you talk about the expected move up Nvidia earnings? I did, John. I did talk about it. The expected move on Nvidia is $10.80. And I looked at a little condor that would be appropriately outside of that expected move. I'm not going to play Nvidia. It's what is Nvidia? We looked at it. I keep doing it. I keep trading earnings, and then as I was talking before about expected net zero trades. I feel like that just continues to happen. It's like I will put on 10 trades, 10 condors, and 9 of them will make a 10% return, and then 1 of them will take a full loss, and I am net zero on those 10 trades minus commission. So at the end of the week, after setting up 10 trades, I, statistically, I'm down commissions. And then I try to do it again and repeat the cycle. And I mean, I've been doing it for years. So some weeks I get excited. I'm like, yeah, I'm going to do it. And I'm going to put on a bunch of earnings trades. And then other weeks I'm just like, why bother? I even tried some calendars over earnings. Oftentimes, again, with the risk is the best way to do it. If you can afford to take the risk and play either naked or some sort of ratio spread, that is where the better returns are. Or pick a direction with Nvidia. And we talked about that, where I set up a directional if we thought we were going to see an outsized move to the upside. Right now, I would love an outside move. This is just the way the market's been coming down. I went from being slightly long deltas to just being even longer deltas. So hopefully Nvidia tomorrow reports a really nice earnings and helps kind of push the market up in general. That would be excellent. Mike says, I'm personally done with coin flip earnings trades. That's exactly what they are. You're taking like a 50-50 shot in most cases. Jamal says, an opinion on Manulife considering it's has growth in Asia and no tariff concerns. You know what? I don't track Manulife. Let's take a look. Manulife Financial, New York. Fair market value. That's decent. Fair market value 39, currently at $30. Raised its dividend for 11 consecutive years. We haven't even looked at the chart. On the 3-month chart, we're down 4%. On the 1-year chart, we're up 32%. And according to Investing Pro, we've got 29% potential upside. Market range has been between 23 and 33, and analysts target 27.32, which is actually below the current value. So this is where I was saying about, what I was saying about risk. On something like Manulife, if we were to, it's MFC, right? Is that correct? I pulled it up and then didn't really look at it. Yeah, MFC. On something like this, with relatively low priced stocks, which a $30 stock is, when we look at short puts, the investment is only $3,000. So somebody could trade a short put in as small of account as $100,000. That would be an appropriate amount of risk, because you've got, you don't want your account allocation to get too out of whack. So this isn't going to load here. I'm just going to be silly. But let's look at the chain and see where the I thought I was going to be able. I thought Interactive Brokers was going to play nice today, but it didn't. It wasn't. It isn't. We'll see what happens. Options. So I don't know when the next earnings report is, but basically, if we were to look at the straddle view of this, typically what I'm looking for is 1% of the risk capital on a monthly basis. So the price of the short put at the 29 strike is worth $35. That gives us a 1% return and gives us a little bit of downside protection. What we can do with this is we can actually sell like really simple ratios. So a trader could, for example, sell the 30 put for 65 cents and buy the 29 put for 35 cents. This gives a $30 potential return on a $60 risk. That is one way to do this. What we can do also is we can sell out of the money. We could sell like an in the money put, say like the 35, and collect $3.20. This gives us upside potential of up to $320, and then we can use some of that money, 10% of the value, to buy a put. This gives us building a spread. But when you think about what you're doing from a risk capital, you're risking $290 to potentially make almost $600. Sorry, almost $300. So this is like a 2-to-1 risk reward ratio. If we wanted to be bullish, we could build that on the call side too. So if we wanted to buy a call on for $1.63, and then we could sell a call, and in this case it wouldn't help us to sell that 36 call or 35 call, but just simply buying the call for $163 gives us the ability to make money on this. The stock would have to go up at least $1 more before I'm at my break even. So that is one way of getting long with not even having long stock, just having that position. The other thing we can do is actually sell. We can do a synthetic position where we're buying. Let me just change my color here. We're buying the 29 and we're selling the 29 put. That gives us a synthetic stock position. If the market was to go down, the worst that could happen is I would lose up to $2,900 if Manulife went completely broke. And if Manulife went up, I am making money on my long call. This gives me a directional trade that looks just like buying stock. And it's very, very low cost. It uses some margin. If I wanted to do it as a married put, then this is where I would just buy my 27 and make sure I have the right color here. Buying a put down the 27 put for 5 cents. Now I have a 30-cent credit here, and I have basically $130 that I've paid for this. I have $2 wide spread that I might have to pay out. So I've got a $360 in total risk, and I have unlimited upside on this trade. So that might be something that a trader might be considering. Hope you guys were able to follow that. The orange was selling and the blue was buying, as per most of the brokerages. AMAX ETF, let's take a look. Thanks for that question, Shamal. I'm going to take a look at Manulife a little bit more. AMAX, we're going to take a look right now. I know you guys you can't see that, but we're going to adaptive hedged multi-asset income ETF. I don't know what this is. Quant ratings is sell. Okay, so as soon as I'm on this type of platform and I'm looking at something that is a little bit outside of the box, I think that these quant ratings can't figure out what this is. So this is, without knowing, I mean, the dividend yield might be huge on this type of thing. So the dividend yield is 7.8%. That's not massive. Pays 5 cents. The dividend frequency is monthly. But some of these stocks, like if you were to look at like YBTC, the dividend payout or the yield is like 49%. Well, the quant rating can't handle it. So it's looking at its momentum. It's looking at the dividend saying there's great. There's somewhat low risk, low liquidity. The expenses are high. The payout ratio is not on here, so I can't actually see what the payout ratio is without digging a little bit further into this. The 1-year chart is 0.21%. For something that pays a 7% dividend, I'm not super keen on this unless I'm really getting good entry price. So it's the hedged portfolio, but in 2022 it went down from $9 to $8. So I'm not really sure what happened there. I'm just going to pull up YBTC just to show you what like a rating might be. So this one is a quant rating as a sell. It's 45% annual yields paid weekly, but beware of the risks. Of course, I mean, there's risks and everything, but in this type of thing, you have a massive potential. The dividend yield is 50% right now. That's if the stock doesn't do anything, and it's Bitcoin related. So if Bitcoin goes down, it could go down, but the yield is huge. And if we look at the last year, on the 1-year chart, we're trading at $42. A year ago, it was trading at $54. So we've dropped 20, what did it say here? 20%, but it also paid 50% dividend. That's a net positive 30%. I think that if I was looking for strategies, I would prefer to take things that have a way bigger potential with higher risk, because when we make money rapidly, it decreases the amount of risk that we have. So I don't like to pick dividend stocks that are too low of an expectancy, if you guys know what I mean. Like I'm targeting 7% means you've got some risk on, and you actually take the risk of not making money fast enough. So that becomes a different risk that you're taking that most people aren't taking into consideration. They're looking at capital depreciation when the missed opportunity or the opportunity cost is another risk that needs to be factored. And I'm not saying go all in on those, but having some sort of balance, taking a hedged fund that has like very little risk and very little reward, and then coupling that with equally to something that has a massive potential but has more risk. Well, now all of a sudden you've got two pieces working together that can function quite well. So that's kind of how I look at those. At a glance, I wasn't loving that trade with a 7% dividend. I'm thinking about like there's this company called if you're looking for hedged ETFs, I think it's called Calamo. I can't remember. There are some wild products out there. Like there's some people doing some stuff with ETFs that are so cool. Like, 1 year out, zero risk, like zero, and then capped potential. So you've got capped potential of somewhere between zero, because you could just make nothing. That is one of the potential outcomes. Or you could make up to, and then there's a cap. And depending on what it is, that cap is bigger. So if you take zero risk, you might have a range between 0 and 7%. Well, that might be a better opportunity than just having money sit in a T-bill. Sitting in a T-bill, I don't know what the rates are right now. In Canada, we're getting just under 3%. So I might want to take a range from 0 to 7 and hope that I make better than 3 rather than just taking the static 3. Or again, blended portfolio where I've got like a portion in T-bill, a portion in a hedged ETF, and a portion in an aggressive ETF. So now I have 1/3 diversification across the 3. That's kind of how I look at it from a holistic standpoint where I'm building portfolios out. Thoughts on Amazon call debit spread March 20th. Yeah, that would be bullish. The 155.220 from Amazon. That call debit spread. Let's look at Amazon just quickly here. 155. So where's my Amazon? It's not gonna load. That's not gonna load fast enough for me. I would not be bearish on Amazon. I would be bullish on Amazon, which is what a debit spread, a call debit spread is. The 155.220. I feel like those levels are appropriate. I watch Amazon pretty closely, and I just want to see what the fair market value is. 225, yeah. So yes, I like that idea, especially now trading at this 211. I had a profit target of low teens on this. And so I'm actually looking for a little bit of an up move. This has moved down a little bit more than I thought it was going to. And definitely, I would assume that over the long term, we're going to see this increase back up to closer to the fair market value. Amazon is obviously a strong company and has had quite the sell-off. If we look at the chart, if we look at the last 3 months of where we've gone from peak at 242 down to where we're trading today at 212.71, that's been quite a drawdown. I like that trade idea. So thank you so much for sharing the 155.220 call debit spread March 20th. March 20th might be a little bit close, but it also depends on earnings. You'd have to look up when the earnings are. Jimmy Trader, it's Canadian by Hamilton, TSE listed, gold ETF. Which one are we talking about? AMAX ETF. Was I looking at the wrong thing? I'm just going to type it in here and take a look at what AMAX. Gold producer. 3 months. yeah, I mean, gold in general has done very well this year. I feel like all of these small gold producers have a good chance of continuing to make money. So if this is giving you what you need to get into a long position in gold, then that's what I would be looking at. You know, with these types of funds, it's like, how close is this is okay. You know, the fact that we've got a dividend yield of 9.25%. We don't know what the payout ratio is. These are hard. It's you know what, I personally have shied away from Canadian stocks, because even though I'm Canadian, the ability for us to research things, it's so much easier on the American market. So I'm not saying those products are bad. It's just harder to do the research. And you know what I'm looking at in general is I want to have some gold exposure. I can have that by playing the gold futures if I want. I can play those as butterflies. I can play those short-term trades, bullish, whatever I want. This is the cool thing about being a trader. If I was looking for long-term holdings and I just wanted to add to a position, that's the type of product I would look at, is an ETF like the one we just looked at, AMAX. I don't know about that particular one, and I typically am doing them in the American exchange, not on the Canadian, just because from a research perspective, it's a little bit easier. But I'm by no means are those going to underperform as long as gold continues to go up. It's just a little bit harder to research. So it really becomes what is your assumption. I think with gold, I talked about it earlier in the stream, I am looking for a specific entry, and I think there could be some very small pullback, and then I will be looking to increase my deltas on that position. Okay, you guys are amazing. It's past 12. I'm going to push this button that says, let's get rich together. That's what we're trying to do. Thank you for your all your support. Mike, I appreciate you sending me an email. Can't wait to read it, and looking forward to getting rich with everybody. If you guys haven't checked it out, head over to patreon.com. Get on my newsletter. You can go on my website as well, drawbridgefinance.ca. Check out that. You can go link there to get on the newsletter. And I will see everybody next week. I'll see my patrons on Thursday. Thanks so much, everyone. Take care. Bye.